Hey, I thought I'd make this quick video because I'm about to send out this newsletter to a bunch of my clients, and I had about 8 clients over the last couple of weeks come to me for their renewal. And what I noticed is the banks are offering them conventional mortgage rates, which are not the best rates on the market. What they don't actually offer their clients are insurable rates. Major banks don't have this option. Only other A monoline lenders and mortgage finance companies do, but it can save you a lot of money. Now, if you owe around maybe $400,000 or $500,000 in your mortgage, this is something that you need to hear before you sign your renewal. Right now, I'm seeing a lot of major banks sending renewal offers in the rate range of 4.2 to 4.5, and that's what they call a conventional mortgage. Most people assume that that's the rate they have to go with, but here's what often doesn't get explained. If your mortgage is 65% or less of the value of your home and it's under $1 million of value, your mortgage qualifies for what's called an insurable mortgage. The biggest misunderstanding with insurable mortgages is that people think they need to pay for a mortgage default insurance premium. No, that is not the case. All it means is that you have a conventional mortgage that qualifies for insured guidelines if needed. And that means the lender, if they want, they have the ability to go out and purchase that insurance if they want it. And in doing so, that makes it so your mortgage is significantly lower risk to them than any conventional mortgage. And when risk goes down, rate goes down as well. So right now we're seeing insurable rate pricing for renewals, so transfers to new lenders, where you don't have to switch up your bank account. They're not like other major banks where you have to sign up for a checking account and all this other stuff to get their best pricing. You simply get it just by moving over to them. Now, what we're seeing is rates between 3.7 and 4% for these insurable offers, whereas the conventional mortgage renewal offers that we're seeing with most major banks fall between, say, 4.19 and 4.5%. That's a pretty significant difference in pricing. That's going to save you $5,000, if not $10,000 or more over that entire term. So if this is something that you're interested in, feel free to reach out. There will be a button in this email. Click that, book a call, we'll have a quick chat. You typically want to account for at least about 3 weeks before your renewal deadline to do something like this. But if you are within that 3-week time period, no worries. You still do have the option to renew into what's called an open term that will be at a higher rate for the meantime until you have the new mortgage sorted to pay out your existing one. Typically, depending on the timeline, if it's within that 3 weeks, if you're renewing tomorrow, well, then you're going to have to pay for a little bit of that cost. But in most cases, if you're right around 3 weeks till renewal or further, and you do end up having to go into one of those open terms just so that we can get the mortgage organized, I'm more than happy to cover that interest cost for you. So click the button below in the email. Check out if this is something that might be available to you. And if so, I guarantee it's going to save you a lot of money. So hopefully this email helped, and hopefully it got to the right person, or maybe if you know someone as well, it might help them too. Thanks a lot.